In this video, I'm going to show you how we bought an off-market 16-unit multifamily apartment that we paid $1.41 million for. This was the toughest deal we've ever had, the most work involved. But a year later, it appraised for $2.07 million. We put $280,000 down to buy the deal, and we were able to walk away at the refinance with $300,000, producing an infinite return. I'm going to show you exactly how we did it, how we found the deal, how we got the deal, how we improved the property, and how we refinanced it so you can do the same. Let's start with step one, which is how did we find the deal? Again, off market. This one was a little different though. This one was when I was first kind of like investing in single family and duplexes and all that. And shout out to my man, David, who I met just through like a mutual referral. People, again, the more people who know you, the more people who flow you, people who know you're investing in real estate. That's why guys, put like you're a real estate investor on your social media, talk about on social media, because that's how people will find you. He's like, hey, I know of this 16 unit, which felt huge back then because I had only owned like houses and duplexes. He's like, I know this guy wants to sell it. He's tried listing it himself. So for sale by owner. I've reached out to him to let me list it. He won't let me list it, but if I bring him a buyer, he's down for it. So I liked it because of the size. Now, location, it's in a good area, DeWitt, Michigan, but this is where I messed up and learned from my mistakes. It's an hour and a half from where I live, and it's an hour and a half from all my other deals. The problem with that is at the time when I bought it, we had third-party management. So I was like, whoa, what do I care? They're going to go up there and manage it. Wrong. Because then when I fired them, guess who's driving up there? Me and my darn wife and my homie, Nick. It's just far away. So we can't keep eyes on the asset. Everything's harder. Our plumbers won't go there. Our maintenance guys won't go there. Our general contractor will go there, but he wants to charge more money. Rightfully so. He has to rent a hotel when he turns units up there. So it's tough. I would tell you guys, being in a good area matters, but you want to cluster your deals. Like right now, we're in my 100 unit. It's right down the street from my 56 unit. It's 15 minutes away from my other 16 unit, from my 12 unit, 20 minutes away from my 42 unit that we're buying. Upside was huge on this deal though, but it needed major work. And we'll talk about that. Mistakes I made, because I love to teach you guys from my own mistakes so you can profit from them. I had this deal under contract because remember I said the agent David was bringing it to me for $950,000. We were like, but Tony, you paid $1.41 million. What happened? I lacked the confidence to do the deal. This was maybe back in like 2021. No, probably 2020. So I had only owned a couple of houses and this guy brought it to me and I had it under contract for $950,000. I backed out, but then I kept circling back. And every time I kept circling back, real estate goes up in value. So he increased the price. I ended up closing it for $1.41 million, but think if I would have bought it for $950,000. So everyone wants to get to big real estate, big deals. Everyone wants to get to 100 units, but you have to have the confidence to close those deals. My advice to you is this: go as big as possible, but go as big as possible as you have the confidence to close the deal. Because if you lack the confidence to do the deal and you tie a deal up and you don't close it, it diminishes your reputation. It diminishes your track record. I wish I would have bought it at $950,000, but I'm glad I ended up buying it at $1.41 million. I was very weak in negotiations. There was so much work that had to be done on this property. He only gave me $5,000 in seller concessions. That's like a slap in the face. The mistake was I wanted the deal badly and let him know it. Never let a seller know you want the deal. It's a high stake poker match. I wear sunglasses when I do inspections now. My wife said, what are you doing? I'm like, I don't want them to see my eyes. I don't want them to see I love it, I hate it, because the broker's watching you, the seller's watching you. If they know you love the deal and you want the deal, they know you won't walk away. The strongest person in any negotiation is the person willing to walk away. All right, step two, let's talk about the debt. Did 80% loan to value again here, local credit union. So $1.4 million, $280,000 down. How did we get the money? We built a business first, lived below our means, took the money from there, invested in real estate. We got 18 months interest only. Very key, because without this interest only payment, there's no way we would have been able to fund all the renovations as well that went into this. When you do a massive value add deal like this, you have to negotiate interest only payments. Lenders don't like to give it to you because it's riskier to them, because they say, hey, you're not even paying down the principal here. You're purely paying interest. So our outstanding loan is not being reduced every month, but you have to negotiate it. I got a 4.25% interest rate. And guys, let me tell you, I felt like that was high back then. Looking at it now, you're like, oh my God, you probably never even see that rate again, right? 25-year amortization. I did use a mortgage broker on this deal. This was our at this time, this was like our second multifamily deal. So I used a mortgage broker. I paid 1% to do it. Would I do that again today? No, because I have the relationships, but don't be afraid to use a mortgage broker starting off, especially with multifamily. So like I said, how did I fund the 20%? My earned income. I did sell a single family rental property in Las Vegas actually, and utilize the 1031 exchange. So don't be afraid to sell smaller properties to trade up to a bigger property. Why not sell one unit and use that partial, I think it was like 70,000 profit that we walked away with, put that down as a down payment to go buy 16 units. So let's talk about step 3, which is the plan. Multifamily money basics. It's the same. If you watch my videos, I love when you guys comment or reach out, like I watch all your videos, you should see there's an underlying theme here. NOI divided by cap rate equals valuation. So if you can control the NOI, you can control the valuation of a deal. Pretty simple. This was a 7.5% cap rate. So a little bit higher of a cap rate. For every $1 we increased the NOI, it was $13.33 in valuation. So let's talk about how we were able to increase the value. When I purchased this 16 unit, my NOI was around $90,000. So not bad. This is an upgraded unit here. So as you see, we did countertops, we did brand new appliances, brand new cabinets. Cabinets are freaking expensive, guys. Holy smokes, are cabinets expensive. Brand new fixtures, brand new flooring. We did carpet, common areas, vinyl plank flooring. I believe we did bedrooms and kitchen, but we just did carpet in the common areas. These are all 2-bed, 1-bath units. We did all new fixtures, all new bathrooms through strategic upgrades. So again, does this look like a Ritz-Carlton? No. Does it look nice and upgraded? Yes. You have to know the area. That's why it's very important to know the market and know the quality of the area, so you don't want to over improve. If you over improve, you're never going to make money. Strategic upgrades and operations, we increased the NOI from $90,000 to $144,000. Guys, that's pretty substantial. And I got to tell you, we put in the sweat equity for that. Let's talk about like the business plan on that. Here's a nice aerial view. For 18 months of interest only, we reinvested every single dollar back into the deal. So I really want to stress, for 18 months, we did not make a dollar owning this property. So you're like, wow, Tony, you're a bad investor. That's not a good return, blah, 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 blah. And this is where a lot of people struggle because they just look at day one. What's my day one return? My day one return on this deal was 0. My 12-month return here was 0. My 18-month return here was 0. But now my return's infinite. That's how it works. You are buying a struggling business. It's a failing business. Is essentially what you're buying. You have to spend money to make money. You have to reinvest capital either from reserves. I like to do it from cash flow of the property, or you can just have those reserves, or some people just like who raise money, raise reserves, reinvest that into the property. You got to fix the problems or else you won't increase the value, because this deal, unlike all the other deals I bought, this deal had major work involved. 12 full unit terms. So floors, every window had to be replaced. The freaking sliding doors had to be replaced. Thousands of dollars. Painted all 3 buildings. We did a new roof on one of the buildings, new landscape, new signage. The freaking sign was like $3,000. I didn't even put a phone number on it. It was a mistake. Named it Park Place, like Monopoly, and then put a freaking phone number on it. Each unit has individual air conditioners. We had to replace 10 out of 16 air conditioners. You know how much an air conditioner costs? $3 to $5 grand. Crazy. A lot of work to manage. Remember, it's 1.5 hours away. It's not like this 100 unit I'm at right now, which is 15 minutes away. So it was very stressful. This deal almost broke us a couple times, not like financially, but like mentally. But did it pay off? Good lesson for you. The depth of your struggle determines the height of your success, and adversity reveals itself to you. I'll be honest, Andrew and I would fight sometimes about this. We were there fighting. Nick was filming. Dude, put her on camera. You saw her stomping around. So I don't want to just paint these rosy pictures for you guys. Like, this created some stress. It was so much to handle. Like, we are not construction people, and this was a lot of construction, a lot of contractors, a lot of managing. But what was the payoff? Let's talk about the payoff now. So again, let's look at the rent roll from when we took over. You can see their rent roll on top, our rent roll today on bottom. I mean, look at this. Everyone's paying $675, $625. The highest rent was $715 for a 2-bed, 1-bath. Crazy. But as an operator, you get excited because you say, wow, rents there today are $1,150. If you got the stomach for it, and you got the business plan for it, and you got the budget for it, and you got the patience for it, and do what we did here, fix up majority of the units, fix up the property. Now look at the rent roll. So when we took over, the total, they used to be called the Windmill Apartments. So that's WSA total, $10,600. That was his gross rental income. Today, Park Place Apartments, $16,770 gross rental income, $465 in pet fees. Again, these these mom and pop landlords, they don't charge for pets, but you got to charge for pets. It's more damage to your units. It's more wear and tear on your units. I got 2 dogs. They wear on things. It just is what it is. And $400 for utility bill back. So we're well over $17,000 a month in rental income. So was it stressful? Yes. Was it worth it? It was. Because let's see what happened. So here's a completed unit turn example. I mean, look how nice it is. This one didn't have the appliances in yet. So obviously we put stove, we put the refrigerator in there. Not only the money we made, but look how nice this, I mean, you should have seen it before. It was a freaking hit. This landlord who owned it before, he was a bit of a slumlord. I hate to say it. He didn't take care of people. He didn't take care of rent. He let you pay on any day of the month. First 30th, he didn't care, but he wasn't going to take care of the property. And he didn't take care of the tenants, which isn't a way people should live. People will pay more money to live in a nice unit. It just is what it is. So look how nice it is now, which is great because a lot of families live there. So let's talk about the exit. Step 4, using the formula, NOI divided by cap rate equals valuation. So $144,666, which was the new NOI, divided by the 7% cap rate, which is what it appraised for, equals $2.07 million. So paid 1.4 for it, appraised at $2.07 million. Went back to the bank and said, hey, bought it here. It's worth this now. I want to do a refinance. We walked away with $300,000 from a cash out refinance, tax-free. Why is it tax-free? Because it's debt, and debt is not taxed. I only put $280,000 down to buy the property. So this was 100% of our original capital returned. What's the ROI? If you put $280,000 down to buy it, you improve it, you fix it up, paid $1.4 million. We're at 2.07. You refinance it. You leave equity in the deal. We left about 30% equity in the deal, but you walk away with $300,000. It's a wire to your account. It's money. It's cash in hand. What's your return on investment? It's infinite. This is the BRRRR strategy. Buy it right, rehab it, fix it up. This one, we definitely rehabbed it. We invested every dollar the property made back into the property. We rent it out. We get the new rents. Tenants leave. Just about every tenant moved out of that one. We rented it back out, refinanced it, and then you can repeat the process. So that's how the BRRRR strategy works. Here's our freaking tax return, guys. I cut out our personal financial information. Guys, show some love on this video if this is helpful. Like, what other YouTuber is showing you their tax return, showing you their rent roll, showing you the rent roll before they bought the property to now when they own it, showing you their business plan like this? We are showing you guys the weeds here. We are showing you guys the trenches. So all I ask for is if you enjoy the video, drop a comment on the video, hit the thumbs up, but let us know, like, do you like these numbers? Is this not enough information, too much information? Just give me some love, give me some feedback if this is helpful, because it's a little weird showing you like all my business numbers and all that, but I do this in order to help you and inspire you that if we can do it, you can do it. So here's a tax return. You see our total income here, just above $205,000, but then you have all of your expenses. You have real estate taxes, you have your insurance, your repairs and maintenance, utilities, your management, your reserves, your vacancy, right? They use a 4% vacancy factor here, which brings us to our NOI of $144,566,000. So that's how it works, showing you our expenses here. Again, people will say, wow, those properties are very lean, or you can't run a property that lean. Well, we do, because the proof is in the pudding, and the pudding is the tax return. That's the power of being owners and operators. Again, if this was with a third-party management company, there's no way we'd be running it as lean and as efficiently here. But this is why my wife and I operate real estate and own real estate. And that's why I'm pushing you guys. If you're going to buy real estate, learn to operate real estate, because this is how you make your money. If the expenses were 50% instead of 30%, property's not worth as much. So it's up to you. And then here it is directly off the appraisal, guys, straight from the appraisal. $144,566 divided by that 7% cap rate, NOI divided by cap rate, $2.07 million. Haters will say this doesn't work. You can't do this. This market's too difficult. The interest rates are too high. This was done in today's interest rates. This was done in 2024. So we refied into a 7.5% rate. So did it suck going from a 4%, 4.25 to 7.5%? Yeah. Does the property still cash flow? Yeah. Would I rather have the money in my pocket, which I then took and I'm now closing on 42 more units? Yes. It's because I'm in my 30s. I'm in growth mode. I want to BRRRR. I want to buy, rehab, fix it up, rent it out, refinance it, repeat it. So this is a real life example. This is not theory. This is what my wife and I are doing. If we can do it, you can do it. Okay. Inflation isn't going away. Prices aren't going down. Look at my example. I had it for $950. Then I bought it a year and a half later for 1.4. And now today it's worth 2.07. If you offered me 2.07, I wouldn't accept that. Prices are not going down. So the best time to invest in your real estate was yesterday. Second best time is today. So if you found this valuable, let me know. Leave a comment below. If you have questions, again, we went over a lot of information, short period of time. Let us know. If you like this format, this case study format, hey, we're going to do more of them. If you don't, that's okay. Let us know too. If you want to get into real estate investing, if you you want to own property like this and you want to invest here in Michigan where the 1% rule is still available, you can still get cash flow, you can still get appreciation, click the link below in the description, fill out the form for the Stephan Group Real Estate Brokerage. I created a brokerage with my wife to help everyday people like you and I own real estate and invest in real estate and receive passive income and cash flow from real estate, because we believe real estate is the ultimate tool for financial freedom for you and your family. Thank you guys so much for being here. Until next time, we'll talk soon. Thanks.